Most people out there have heard a story or two about a reverse mortgage that went sideways. We've all heard and seen the media hit pieces or have heard through the grapevine about someone losing their home because of a reverse mortgage. I still get calls all the time from people who are genuinely scared of this loan because of these stories. That's why today's video is so important and is vital in breaking down the true causes behind most of these reverse mortgage catastrophes and the common sense ways you can 100% prevent them from happening if you choose to get one. So stick around for a while to get the scoop. You're not going to want to miss this one. Hey everyone, Taryn Proctor here with Retirement Home Equity Advisors, bringing you more important information about reverse mortgages. If you don't know me yet, I am the founder of REA, and we are a mortgage brokerage specializing exclusively in reverse mortgage financing. I'm extremely passionate about spreading my knowledge about this product to you so that you are better positioned to make well-informed decisions about this fairly complex financial instrument. So if you find you learned something valuable today, please take a second to give the video a thumbs up and then subscribe to the channel. Your likes and subscribes not only will get you more immediate access to my education, but will really help videos like this get seen by more people who may need this information. I put out educational videos just like this about every week. So be sure to also hit that notification bell as well when you subscribe so that you get notified when new videos get published. Okay, now why is this such an important topic that we discuss? Well, for starters, most of these negative stories nowadays about reverse mortgages are misleading at best and downright malicious and ill-intended at worst. And what is frustrating about this is there are so many people out there right this second that would greatly benefit from a reverse mortgage and will never even give educating themselves on the topic the time of day because of these stories. People are so fearful of the myths and the misconceptions that they don't even consider it a legitimate option. Now, don't get me wrong, a little skepticism or caution is, of course, healthy and is hopefully what propels folks to make sure they understand and learn all they can about this product. But being fearful of something because of misleading gossip is not healthy. So let's set the record straight here and now, because is this product something you should be fearful of? Absolutely not. But with that said, again, it absolutely is something that you should take your time educating yourself about, making sure you thoroughly understand the ins and outs to determine if it may benefit you or not. Now, let's start with the biggest catastrophe of them all that most commonly gets reported on when it comes to reverse mortgages, and that is foreclosure, which a majority of stories that are sensationalized and talked about are folks who lose their home to a reverse mortgage. This is very sad no matter what the cause is, but so important that you understand what happens to lead to this in the first place. And in many cases, when you get into the nitty gritty of these stories, it turns out that these folks hadn't paid either their property taxes or homeowners insurance in some time. I think it goes without saying that no matter what kind of mortgage, or even if you don't have a mortgage, foreclosure can happen due to lack of property tax payments. But you don't see media stories about younger folks who are getting foreclosed on every day because they aren't paying their taxes, do you? That should tell you something right there. So, really simple way to prevent this from happening is to stay current on those property charges. Lastly, on this topic, we all know that things happen. Life happens, and sometimes finances get messed up because of it. So I always like to tell my clients a reverse mortgage lender is not going to foreclose on you because of one missed payment to property charges. It is when there are multiple payments missed and they then start to pay on your behalf and you cannot pay them back that things then get dicey. I've seen folks who hadn't paid their taxes in over 4 years and the lender still didn't foreclose yet. Now, don't take that leeway for granted though, as I'm not saying they will always give you that much time, but pay your property charges and everything will be fine. Next, this one is a bit less common while borrowers of a reverse mortgage are still alive, but happens nonetheless. Foreclosure can also occur if it is found that the borrowers are no longer living in the house, as it is a requirement of the reverse mortgage that the home be and always remain your primary residence. So if you move out of the home and the lender finds out, that can cause the full loan amount to become due. And if you are not able to prove that you still live in the home, they can foreclose. Now, full disclosure here, the way that lenders ensure you are still living in the home is they will mail out an occupancy certificate to you every year, which you are required to sign and send back to them. If they don't receive this occupancy letter back, this indicates to them that you may not be occupying the home. I came across a client that innocently forgot to send this back to the lender, and it did cause some havoc for her. Now, the lender will make more attempts to reach you in this instance to make sure you are still occupying the home. But if their multiple efforts to confirm you are occupying the home go unanswered, they will eventually conclude that you no longer live in the home. That can then lead to foreclosure. The havoc I was speaking of for the particular client I was referring to didn't actually happen until after the lender made multiple attempts to reach her. The borrower said she never responded because she thought it was a scam. All it took to clear things up was a phone call and for her to finally send in her occupancy certificate. So, clear-cut way to prevent this from happening is always send your occupancy certificate back and never ignore attempts from the lender to get in touch with you. Now, one last catastrophe I want to address in this video. I saw a story about a daughter whose mother had passed. Mom had a reverse mortgage, and the whole moral of the story was that the lender was foreclosing on the mom's home, which the daughter wanted to keep. The daughter couldn't understand why the lender was putting her through this and how difficult it was to deal with. I really feel for the daughter in this instance because really it wasn't her fault and there really wasn't much she personally could have done to prevent this. But what happened as we got further into the story was that mom never informed the daughter that she had a reverse mortgage. So when the mom passed away and the lender got wind of it, the reverse mortgage then needed to get repaid. The lender went through the typical process of trying to inform the next of kin of the loan needing to be repaid, but they never heard back. Now, side note here, when a borrower or borrowers die who have a reverse mortgage and they do not have any heirs to speak of, the lender cannot just simply sell the home and get their money back. They still have to go through the legal process of foreclosure to sell the property and recoup their loan amount. So if they don't hear back from heirs, they have to assume there are none and begin the foreclosure process. Now, unfortunately, in this particular case, there was an heir and the lender had begun the foreclosure process before she got wind of any of it. So I'm sure at that point, it was a headache to deal with. Now, the way that you can prevent this situation from happening is prepare for this and talk to your children or heirs, if you have them, about what will happen after your passing and what they can expect from the lender and how to deal with it. This would have saved the daughter in this story a major headache had that happened. All right, so just to recap everything that we just went over, there are very few rules that you need to follow when it comes to a reverse mortgage. And as long as you follow these rules, you will prevent any of these catastrophes from happening to you if you choose to get one. So number one, you must continue to make your property charge payments, taxes, insurance, HOA dues if you have them, etc., typical of any mortgage. Number two, the home must be and remain your primary residence. Make sure you sign those occupancy letters and send them back. Number three, we didn't actually discuss this rule of a reverse mortgage because I've never even heard of a foreclosure happening because of this, but nonetheless, it could happen. You must keep the home up to FHA standards. Again, typical of any mortgage. Number 4. Now, this is not a rule or obligation of the reverse mortgage, but some darn good advice to prevent catastrophe. Discuss this with your heirs. Make them aware of what they can expect after your passing. Have a plan. So, you see, folks, this is nothing to be fearful of, and a majority of reverse mortgage rules are the same as any other mortgage, with the exception of the occupancy requirement. Most often, the terrible stories you hear are because, unfortunately, the borrower or borrowers didn't follow one of these rules. But as long as you are aware of your end of the bargain and hold up your end of the contract that you know about going into it, you have nothing to fear. And that concludes today's video. If you have any questions on today's topic or about reverse mortgages in general, please don't hesitate to give me a call anytime. I'm always happy to answer any questions and further your knowledge about this product. You can reach me at 888-982-0475. I'll see you all next week.